Welcome, everybody. July 28th, the last week of July. Scott Riley, the market update desk, NMLS 157524. We had really a slow data week last week. Main thing last week was durable goods orders, which came in slightly better than expected, but started what will be an extremely busy week from over the weekend. Yes, we had more weekend news, as we've seen for probably the last 3 months. We saw an EU tariff agreement come into place of 15%. Now, that's in the heels of two of them the previous week. And it looks like some more tariff agreements are going to be pending very, very soon, probably within the next week to two, because August 1st was the deadline for many of them. So it looks like those are going to come into fruition relatively quickly. Now, this week is a barn burner of a week, probably, if not the busiest data week, probably in the top three that I've seen in the last 3 years. So on tap for this week, we've got bond sales, we've got jobs reports, the JOLTS report, the Challenger. The Challenger jobs report, the JOLTS report, ADP, BLS, and weekly unemployment filings. On top of that, we have PCE, the Fed's favorite measure of inflation. Where's that going to come in? Will it finally show, quote, the expected inflation hit from tariffs? Most likely not. Then also we have the Fed meeting, Fed decision, and Q&A. Holy smokes, that is a ton going on. Right now we're seeing the 10-year treasury. It went up two ticks today, 4.41, I believe. We've gone, we've really vacillated between probably 3.38 and 4.41, probably for the last week of trading cycles. And we're seeing ups in the Dow, S&P, and NAS. We have earnings season going on top of everything else. I believe we get most of the Mag 7 this week. We got a lot of banking last week where Goldman Sachs, of course, knocked it out of the park. No surprise there. So all of this going on, what does it mean? It means question marks. Any one of those reports could give us less than expected numbers. Any of them could give us better than expected numbers. So hold on tight. There's going to be a whole lot to digest over the week. We'll stay on top of it. We'll give you that information. In the meantime, man, it's hard to think we're closing in on the end of July. It's time to get out there and start buying if you haven't. Rates are historically good right now, and appreciation locally is still very, very strong. Actually, in addition, this week we get home appreciation numbers. Why not more information? Last week we did see existing and new home sales come in lighter than expected, but keep in mind that's a national number. We need to be focusing on what's going on in West Michigan because we have a very strong, balanced economy and a housing market that is still and will continue to be imbalanced with more buyers than sellers. Stay here for all the news. We'll keep you up to date. Scott Riley, the Market Update Desk, your original singular market news source for West Michigan. 616-293-2189. Have a great day.